Hi, good afternoon, everyone. Rob Lukey with our Capital Group and Shop Prop Realty. I wanted to take a second to go over the news announcement that we saw today regarding the IMF talking about the housing bubble and a possible correction coming. And I wanted to go over some charts and dig a little deeper into the comments that were made, that Mr. Zhu made. So regarding a few of the charts that are out there regarding the housing market, regarding the house price to rent ratio, latest versus long-term run in selected countries. Remember, the idea is regarding the rent ratio versus buying ratio. It's an important thing because what happens is it says that when a property is obviously cheaper to rent than it is to buy, you're going to go ahead and rent versus buy, right? So we're seeing this happen in in countries. If you look at the U.S., we're right below its average. So I'm pointing this out as a way to kind of show you some thought process of looking at some of these charts and make sense of them. The house price growth, obviously seeing some big move. As a matter of fact, in Canada, it says, for example, house prices are 33% their long run average in relation to incomes and 87% above their long run averages compared to rents. And you can see that here. This is telling us that it's obviously a lot cheaper to rent a house than it is to buy a home in Canada. As a matter of fact, if you charts that I showed earlier this year regarding rent buy versus ratio in the U.S., you'll see in 2000, 2007, 2008, we were at 2007, late 2006, we were at almost this 45 to 60% ratio in the U.S. House price growth, obviously seeing big growth in the world's cheapest market at this point is Japan, where the housing market is 41% below its long run average relative to incomes and 38% relative to rents. So we know that in Japan that it's a lot cheaper to buy a home than it is to rent a home at this particular time. Obviously, this global house price index and related to GDP, we worry about that. We want it to be weighted equally and not too aggressive in the gross domestic product of countries. And the house price to income ratio, this is an important one as well, simply because we're wanting to make sure that to buy a home is staying in a relative price terms to people's income. And as you can see in some of these countries like Belgium, Canada, Australia, New Zealand, these type of environments you'll notice are not going to be sustainable. People won't be able to afford homes. We saw the market do this mainly because of low interest rates across the board when it came to the Great Recession, when we saw housing prices in the U.S., and that was coupled by housing markets getting beat up in the overall world market. And one of the reasons why you saw China raise interest rates and go against the IMF. So in the U.S., house prices are rising fast. The analysis would be in the U.S., house prices are rising fast, not overvalued, coming in at about 13.4%, their long run average relative to incomes, and they're still 2.6% above their long run average relative to rent. And according to the IMF, this is according to the IMF's number. So it kind of stick with our long-term range, at least at this point, and that if you look at the Case-Shiller index that we saw in earlier this month, and if you look at the IMF's numbers, it is pointing to let's say a 2 to 3% growth rate, dropping from the 12, for example, that we saw last year in home price. Continuation of this move up, although it's slowing, and then maybe even getting up to those 2007 levels over the next 5 years if we don't spike too hard. So that being said about the overall market, to take a look at our Capital Group, again, if you're interested in getting involved in the market, you can always look at our past performance and get an idea of what we've done. If you have an account, obviously that's easy. You go ahead and you can log in. You can see your current holdings. You can see what those holdings are doing by clicking again and get an idea. Now with us, remember what you're able to do, which makes it nice for a lot of people, is you can put in a passive order, which makes it easy to make an investment. You have an investment, you go ahead and say, I want to invest $100,000, and you can say in California, you can pick or choose, or you can just say simply at OCG's discretion, agree to the terms and begin placing orders. In that situation, you'll be placed in properties as you come up in queue. So there's an order, obviously. It's a first in, first filled, just like the stock market. If you put an order in, it's first in, first filled, and you're able to, and you'll be allocated in different properties as your turn becomes available. That being said, in Seattle, regarding our regular retail side of the firm, remember, Shop Prop, we will be launching a new site in the next 4 to 6 weeks. Our overall goal at Shop Prop Realty is to be the experts at the best price possible for our clients, giving them back the most money. One of the things that we see is people really getting worked over when it comes to commissions, and they're not seeing the real significance in it. So we want to become the experts when it comes to showing people homes that they have that they've searched for and found. So we want to become an expert in showing them those homes, negotiating prices for them, getting them sold or getting them bought, and then processing the paperwork for them and giving them as much back as that commission as possible. This is a true story. We had a client list a home in Medina, Washington for one point. He bought a home through us in 2008. We gave him back over $50,000 in commission. He just sold his home through us in 2014. He saved another $50,000 in commissions when he sold it. That's over $100,000 in commissions that would have went back would have been into an agent's pocket. And the thing is that we're able to transact that business, negotiate and handle that, and still operate profitably because of the technology that's in the market currently today. So again, I hope everybody has a great day. That's our take on that. That's the take on the housing market, at least as we see it at this point. And have a great day. Thank you.